Alright, so we have all this SIBI in here. Let's take a look at it from the regular trading hours. You can see our opening range gap. That's here. We're going to highlight that now. Opening price to closing price. So we have a discount opening gap. It's likely to come back up, but we don't need it to go all the way back up. The midpoint is usually, like, that's the strongest likelihood of a return back to a opening range gap. So how do you use that? Let's go back into electronic trading hours. I didn't go good enough job to articulate that mid-range level. Let's do this. 50%. And we'll make it solid. No, let's not do that. Red. Okay. And then back down into electronic trading hours. So there you go. There's the midpoint of the opening range gap. So in a morning like this, see how we have just basically the drifting, grinding back up in there. Now we have an opening range gap that has gapped lower than where we settled the previous session. We have all this SIBI. Midpoint of the gap is here. We have relative equal highs here. We're opening in a discount. We had high impact news at 8:30. It's dropped. So retail is going to want to continuously sell short. They're going to be looking for shorts. They're going to be looking to get below here. It can, and this is why you sit still, it can drop down, take out these relative equal lows, and then come right back up to mid gap or higher if it wants to. But in this instance, this is where I sit still. I don't do anything. I observe, I watch. If we didn't have the economic calendar like we have this week, I would be looking for opportunities to maybe get a run just below something like this and not take the lows out, thinking that would trap traders short, and then reverse and then look for a ride back up into the consequent encroachment of the opening range gap. But in plain terms, we do nothing. We expect nothing. We're observing. We're submitting ourselves to the first 30 minutes. That's the opening range. That is the opening range, and that's the time frame you want to be focused on. Nothing shorter. It's the first 30 minutes. Why the first 30 minutes, ICT? Because all of the buy and sell programs that large institutional traders employ, they're funneling their orders in for the first 30 minutes. They're using all of that liquidity, that rush to buy and sell that they know is there, it's prevalent. They're literally forcing it in those first 30 minutes. So if you're hearing somebody say the 15-minute opening range, that's horseshit. It's 30 minutes. And then at 10 o'clock, you start your silver bullet.